All right, guys, welcome back to the channel. So today we're going to talk about McDonald's. This is definitely a buying opportunity coming up. So I just wanted to make a video on this. Let's go over what Fidelity has to offer on this. $253.54, down 1.77% today. Let's look at the detailed quote, and then we'll move over to the chart. Looking at the detailed quote, the PE ratio is 21.92, so let's just say 22. Sector is consumer discretionary, and it's traded within the Dow Jones and S&P 500. As you can see here, year to date, we are down 13% from 301 all the way down to 253. We are making new lows. When you go to the 1 year, you can clearly see that the support level is around 246. So this is definitely why we're bringing this up. We've had selling over the last 6 months all the way down from 300. So I want to bring this up because when you look at the 2-year chart, you can see you've had areas of support at 232, 246 is next to be tested. But there's definitely going to be a psychological level being tested at this 250. So if you're looking to buy shares, I definitely don't blame you there. Let's look at some of the things that make McDonald's stand out. So if you look at McDonald's here, they're a dividend king over here. 2.59% is what you're going to get with these guys. And it shows their dividend payout ratio is 65% previous trailing and 57% current trailing 57%. Their median is much higher. It's increased over time, year over year. And look at their earnings per share. Q3 2023, they beat their earnings by 19 cents. Q4 2023 by 13 cents. And then in the first quarter of 2024, they missed by only 2 cents. And now they have earnings coming up in July. So July 25th, they have earnings with a estimated earnings per share of $3.10. And the low range is $3.01 versus $3.25. Just looking over here, you can see the previous, where their estimate low range was $2.63 and $2.84, and they had 2.7. So if you look at the past, they've been averaging 2.8, 2.7, and now before that in Q3 of 23, they were earning about $3.19. But now if you look at the sentiment, we are weak, short, midterm, and long term. And when do you want to buy good companies? You want to buy them when everybody else is selling. Analyst ratings here, we can see they are bearish, but let's break it down and see why. So we're going to click on the forward equity research here. And as we load this up, you can see that for those of you that don't know what McDonald's is, they are a franchise operates restaurants. And then let's look at the actual rating that they gave them, where they think the earning strength is neutral. They're saying it measures the acceleration, deceleration of the 12-month earnings per share growth. And they're saying that McDonald's earnings has increased from $10.89 to an estimated $11.88 over the past 5 quarters. They have shown no acceleration or deceleration in quarterly growth rates. And you can see it right here. They show it June, September. This has been slowly increasing from 10.89, 11.38, 11.74, 11.95, and now 11.88. So it's not the end of the world in my opinion. Are they slowing down? Is it interest rates? I'm not sure what it is. But that's just what Ford shows right there. Next, McDonald's in this trend channel, where it's traded in this channel for years, since 2016. This might be the potential break here where we get that we go from 253 maybe down to 223. In a perfect world, it goes down to 200. That'd be amazing. But, you want to buy when it's in the bullish trend, and you can easily follow a stop if it breaks pattern. So that's definitely how I'm trying to take this. But the last 5 years, this is where we've been at. So what I'm doing is I'm waiting. I'm going to nibble a little bit at 250, 246, hold for the long term. Going to add if it goes down even more. But this dividend will help me hold it because I'm getting 2.69%. And you can easily kind of follow a stop loss here if you want to. You can look at this range here. I'm just going to get rid of these. Around here, you would have 215. You would definitely have some support. But you just got to be careful. So for me, dollar cost average in, no big deal. But I mean, all it's doing is selling off. And it looks like nice controlled selling because it's just, it consolidates, sells off, consolidates, sells off. So maybe over the long term, they think it's not a good buy. But to me, if you're going to hold long term, you want to buy when things look a little bit more shaky. And then looking at the 1-year RSI, we're at less than 30 right now. So for me, this is a no-brainer. If we can break 250, that'd be awesome. And then try to get down here, 246, 242. To me, it's a no-brainer buy. But I just want to bring it up. Let me know if you're trading this stock. This is definitely something I'm watching and anticipating, waiting for the next turn out here. Because the way I look at it is you have this pattern right here, this trend channel right here. And it is starting to get broke a little bit. Let me just move it over a little bit. It is selling off, like this is getting tested right here. So if it does break, we might head down. But there's going to be buyers. There's going to be scalp opportunities over here in this 240 range, 245. I don't think McDonald's is going to keep selling off like that. All right, guys, let me know if you're investing into McDonald's. This is my channel, almost at 2,000 subscribers. Thank you guys for subscribing and watching my videos. Definitely appreciate that. Check out my playlist. There's a bunch of stuff on here. And also check out the membership as well. It's pretty much free to join. It's $2 a month. It's just to support the channel so I can buy more stocks. But anyways, check out Fidelity's and ETFs, index funds, the Vanguard investments, the Trading P&L 2024, day trading on the Fidelity Active Trader program. Definitely be sure to check that out and let me know if you're buying McDonald's.